Assalamualaikum and very good day. So today we would like to have on our chapter 1 of ACC 116. Alright, so this is relate with financial accounting is actually relate with what you have studied before, but now we are going to proceed with the cost accounting. First of all, under 1.1 we would like to see what is the difference between the financial accounting and the cost accounting. So cost accounting is actually here helping in finding out the cost of product and control of a cost. So basically what we would like to do in cost accounting is actually, let's say we have a product, so we would like to see what is the total component of the cost that we have in the product, and then how suppose we control the cost that we have on that one. And then the other one is the process of determining and accumulating the cost of product or activity. For example, we have the product just now, so we would like to determine what is actually the cost of the product, and also if the services that we provided, also we would like to trace to accumulate to determine the cost of the activity. And then the third one will be we would like to measure the efficiency of the enterprise, whether the company is efficient or not in operating their business. Right, compared with the financial accounting that you studied previously, so this one is actually to know the financial position of a company, whether they are making profit, so what is the assets of the company, what's the liability of the company, whether they have enough money to pay or not, right? So that one relates with the financial accounting. And then so what you should do also previously, recording the business transaction of the books of accounts. So previously you record everything in the account of the company. So now we would like to see the difference between financial accounting and cost accounting in terms of their number one is based on their objective, right? So in their objective, so we can see here the financial accounting will provide the financial performance and also the financial position of the business, whether they are making profit or not. But for cost accounting is actually to ascertain, to determine the cost, and then to the control of the cost in order to make a decision making. For example, we would like to identify the cost of the product. Let's say we would like to produce a computer, so what is actually the cost of the computer in order to make decision. For example, if we have this kind of cost of a computer, so how much the selling price that we can state. All right, number two, in terms of nature, all right, it's classified, records, and then presents and interpret the transaction in terms of money. So this is like everything we interpret in terms of money, for example, the assets and liability and so on. But for the cost accounting, is actually we classify, we record, and then represent, interpret in a significant manner of the material, labor, and the overhead. So we would like to see what is the component of the cost is actually for a product. For example, it's come from material, labor, and overhead. So material is the main ingredient. The labor is like we need the production workers to produce, and also the overhead is what is the other costs that the company has to pay for it. And the third one is the recording of the data. So what is the difference between the two? So financial accounting is actually based on the historical data. So record when the transaction is already did. But for the cost is accounting is actually present the estimated and budgeted data. So it means that here it's also, instead of they have the historical data, but this one also for the budget. Budget is actually for the future. So this one is more on historical and also for the future. Right, we move on to the users of the information. So for the financial accounting, so who are the user? The shareholder. The shareholder is actually the investors' money, right? And then the creditor, they would like to see whether the company able to pay back the money or not. And then for the financial analyst, to see the performance of the company, and then the government, whether they can get the tax or not. But for the cost accounting, is actually this one, the information is used for the internally or the internal management at the different levels. So it depends on the level. So basically this one for cost accounting internally, and for the financial accounting is actually more on external. All right, number 5, in terms of the analysis of the profit, and for the financial accounting is actually the profit or loss of the organization. So we would like to see previously you prepared the profit or loss for the for the company for the whole year. But for the cost is accounting is actually it details not for the whole company, is actually the profit of each product, a process, job, and contract. For example, if we have 5 products, so we have to see the profit for each. The product A will be different from product B, product C, D, and E. So we would like to find the product for each of the profit for each of the product. All right, in terms of the time period, we would like to see here the financial statements are prepared definitely for one whole year. But compared with the cost accounting, is actually we prepared as when required. It doesn't matter when we really need it, we need it, then we prepare. For example, if we would like to produce a new product, then we prepare the job cost for the new one. All right, the last one, the presentation of the information. Right, the presentation of the information for the financial accounting is actually a set format. So this one we cannot change the format. If we have to follow the MASB, Malaysian Accounting Standard Board, then we have to follow the MASB, but not for the cost accounting. So this one not only set format for presenting cost information. So it means that here there is no proper format. So it depends on us how we would like to prepare. All right, so 1.2 is actually the elements of cost. So we have the material. So what is material? Is actually we purchase from outside sources which are used to manufacture the product. So it depends on what product that we would like to produce. For example, so we producing the baju kurung, maybe we need the cotton. If we are producing the car, so we need the steel. So this is the raw material or the main important things that in order to produce a product. So the next one will be the labor. So labor is actually the workforce to keep the business is going on. For example, the factory workers. So from materials or this kind of labor, they will keep the business going to produce the product. And then we have the other expenses and also the overhead. So expenditure other than material and labor, we name it as the other expenses. So expenses, we have the direct expenses and also we have the indirect expenses. The indirect expenses we can name also as a overhead. So what about the direct expenses? Direct expenses, it means that here, so this is directly that we would like to do something. For example, hire of special machine. For example, if we would like to produce something, if we don't have this kind of machine, we are unable to produce our product. So in order to buy, we don't have enough capital, we don't have enough money, we just hire from our supplier. So this the cost of the hiring of this kind of special machine, we name it as a direct expenses. Some other things like the other examples is royalties. For example, for the book printing, for the song and everything, right? So this is royalties is paid to the owner. And then also for the patents. All right, indirect expenses, or the other name we call it as the overhead. So we have material, but this one is indirect material. Indirect material is actually it's not the main ingredient, it's actually the minor one. For example, is we producing cars, so we need steel, we need rubber. That one is the direct material. The indirect one, some sort like we need glue, some sort like we couldn't see. So we couldn't see the glue in a car is actually. So it's some sort like the small amount of material that we use. So indirect labor, some sort like they are not producing directly. So the production workers is actually they are labor or direct labor. So they are is actually focusing on the producing the product. For example, like the technician, right? So the technician will fall under indirect labor because the technician is not producing the product, right? And indirect expenses, some sort like the electricity bills, the water bills, and so on. So hope that you understand. Right, so this is the classification of costs. So here, the classification of costs in terms of nature, right? So based on the nature of cost, we come again, we have material, labor, and other expenses. I think that you really understand just now. Material, we have the raw material, we have the semi-materials and components. And normally we classify is material is raw material, direct material, and indirect material. So raw material is actually, or direct material that we need it. Indirect material is some sort like just like what I said just now, we need glue in producing a car. All right, labor also we have two, direct labor and indirect labor. Direct labor, the person who doing the job, for example, the production workers, the supervision, the maintenance, the clerical is falls under indirect labor. And then the expenses, what I said just now, so we have expenses, direct and indirect. So direct is actually the royalties just now and so on. All this power, electricity, depreciation, insurance is falls under indirect. All right, so now we would like to classify the cost according to their function. All right, according to their function. Number one is production cost. I think that majority of you understand what is the production cost. Cost is actually the cost to produce for the product. So function is time of acquisition to complete the item. For example, the production overhead, direct materials, direct labor, direct expenses. So this is the, in order to produce a product, the cost that we incur in the production. All right, admin. I think that everyone know is what is the admin. Is the general administration, including directing and controlling, some sort like audit fees. We would like to rent our office and so on. All right, and then the marketing cost is actually the selling, publicizing, and also distributing product, servicing. For example, selling, cost, publicity, and also distribution. All right, finance cost is actually relates with the financing activity. For example, if the company do not have enough capital, so they would like to borrow from the bank, so the bank will charge them interest and other commitment fee that they have to pay, the insurance and the dividends. All right, then the research cost is actually if the company would like to seeking a new ideas or to seek for the improvement. So this one it falls under research cost, some sort like the laboratory maintenance, salaries of the research staff and so on, to find the new ideas for make sure that the product will not be obsolete and so on. All right, development cost is actually to improve the new or improve the ideas. For example, just now already research that this one will give you a good product. So the development, it means that the new ideas that we have just now we would like to develop the ideas to become the product. So this is some sort like the cost of test, trial, obsolescence, and supplies. All right, number three, we can classify our costs according to their behavior. Right, so the cost also, how do they behave? So the cost is actually they will behave to the level of the activity. So it means that here when the units is increased, so the cost will increase. All right, the first one we are going to look at the fixed cost. So what will the meaning of fixed cost? It means that the cost will not change or is going to be constant over a given range of the activity or the volume or the unit within the given period of time. All right, so here we have, so this is the graph. All right, for example, it doesn't matter whether you produce the 10 unit, you produce the 20 units, you produce the 30 units, the depreciation of the machine per year is still 10,000. It doesn't matter whether you this figure, or this figure, the cost is still the same, which is 10,000. All right, so it means that here I would like to repeat back again. So the cost will constant or not change, even though the level is changing or the level is increased. All right, number two is variable cost. So what is the meaning of the variable cost? So the cost will vary in direct proportion. Direct proportion. So it means that here you can see here, so this is the graph here. All right, so direct proportion here. So it means that here if you produce 10 unit, the cost will be 50. For example, this is the RM and this is the units. All right, if the company is producing 20 units, so the cost will increase by 100 ringgit. So if the producing 30 units, so the cost will be 150 ringgit. So if they produce 40 units, so the cost will be 200 ringgit. So this is what we call is a direct proportion. Direct proportion, it means that when the unit increase and the cost will increase. For example, direct materials. For example, if we would like to produce 5 baju kurung, so we need, for example, 20 meters, right? So it means that direct proportion. Okay, so direct wages, for example, if we need only one workers, so the salary may be 1,000. If we need for the 2 workers, so we need to pay for the 2,000. And also the direct expenses. The more that we produce, so we have to pay more royalties for the songwriter, for example. So the semi-variable cost here, it's contain both fixed and variable costs. Alright, so this is the graph. Alright, so this is the fixed cost and this is the variable cost. So basically this is, for example, the fixed cost that we have to cover when we do not use the for example, the telephone cost. For example, let's say we have to pay the minimum, and then the minimum charge, for example, 50 ringgit, and then if we use more, then we have to pay more. Same also with the water and electricity, there will be the minimum charge. So the minimum charge will be the fixed cost, and then if we use more, then we have to pay more. Alright, and then we move on to the step cost. Alright, so this is the step cost. So this step cost, we call it as is going to be fixed over a range of activity. So it means that here it's going to be fixed at a certain phase here. Alright, and then it will increase and then it's going to remain fixed again. Alright, and then rises to a new level as the activity changes. So after it fixed at certain, and then it will increase at a certain level, and then it will fix again, and then increase, and then it's going to fix again at a certain level. For example, depreciation of machinery. Alright, for example, if the level of the activity increases, so the cost will increase. Alright, now we move on to number 4, product and period cost. So we would like to see what is the difference between the product and the period cost. So product cost is actually the cost to make for a product. So it include all the manufacturing costs. All manufacturing costs here, it means that we include the direct material, for example, if we would like to produce car, we need steel, we need glasses, we need rubber and so on. And then we need the direct labor or the factory workers for those who fix to make the car. And then also we have the manufacturing overhead. So it means that the other cost which is not related to direct material, direct labor, or the other indirect cost which is in a factory. So this is what we call product cost. Alright, period cost. Period cost is non-manufacturing cost. So non-manufacturing cost, it means that other than manufacturing, it means that other than manufacturing will be non-manufacturing. It could be selling and admin. It relates to the shipping, admin, salaries, executive salaries, admin office, commission, advertising. So this is the cost that not relate with the manufacturing. Alright, so number 6 is controllability. We would like to see whether the cost can be controlled or cannot be controlled. So this is controllable. So it means that this one can be controlled or can be influenced by the decision or the action of the manager. So it means that manager are able to control this cost. For example, retrenchments of salaries, for example, like if we would like to terminate the staff and so on. For example, the electricity bills, we can if we would like to reduce the bill, so we can switch off everything. Alright, so what will be the uncontrollable? So uncontrollable, it means that cannot be influenced by the decision or action of the manager. For example, the raw material, cost of raw material. We couldn't see like if we would like to purchase something, we cannot set the purchase price of the material. So we have to follow from the supplier. Alright, so number 7, costs are going to be rated according to their normality. Alright, so the first one is normal cost. So what is a normal cost? And the other one is abnormal cost. So normal cost is actually the costs have been planned. So what we are planned, so this one will incur at a given level of output. Part of the other one is this is the cost of the production. So it means that that is in terms like it's normal for them. For example, loss due to evaporation, for example, ice, gas, in a certain time, it will reduce the liter or the size of the ice because of the evaporation. Alright, so that one is normal. Alright, so the abnormal cost is some sort like you are not planned for. So this is some sort like normally incurred at a given level of output. So for example, the cost of production, transfer to profit and loss of account. For example, if we have here, they will give you lost production due to plant, the machine breakdown, and then the fire, flood, and so on. So this is what we call as the abnormal. So we do not predict this one will happen. Alright, normal cost is like just in our routine transaction, right? Alright, so this is the cost statement. So lastly, after we studied everything, after we studied the material, labor, and overhead, so we are able to do our cost statement. So our cost statement comes from all the direct material. We name it as the direct material, direct labor, and direct expenses. So the component of the three here, so we name it as the prime cost. And the prime cost we add with the production overhead will give us the production cost. So after we get the production cost, we add with other costs or period costs here, admin, selling, and distribution overhead here. So we get the total cost. Alright, after we get the total cost, we can set a certain profit range that we want. We add this profit, so we are going to get our selling price. So this is the way how the selling price should be set. Alright, now we move on to the profit center and investment center. So before that, we have to know what is a cost unit. So what is a cost unit? Some sort like this one is said like made of material, labor, and other expenses. So direct costs are charged directly to a cost unit. So indirect costs, which is overhead, cannot be charged directly to a cost unit. So just like what I mentioned earlier, so prime costs come from direct material, direct labor, and direct expenses. Alright. So the cost unit we're going to explain later here. So the detail will be at the back side. Alright, so this is the cost center. Cost center is actually is a unit where the manager or is accountable for the cost incurred in that unit. For example, it depends on the situation. For example, in universities, maybe the cost will be centered at according to the faculties, or in a factory they are going to center it cost according to their department. So it depends. So it means that here where is the unit is going to be accounted for the cost actually. So profit center is actually a manager or a place where accountable for the profit of the company. Alright, and then investment center is actually this one accountable for generated and invested of the capital. So it means that here this is the center where the investment of the company is going to be made. Alright, so cost unit, the detail on the cost unit. So this one, so this is what we call the suitable or the unit of measurement that we would like to measure on something. So suitable cost unit depends on the several factors such as nature of the business, process of the information, requirement of the costing, and so on. So it depends on the nature of the business itself, right? If we would like to know the cost of a unit itself. For example, in steel and cement industry, the cost unit will be the ton. All right. So for the transportation, it is going to be, the unit of measurement. It means that passenger per kilometer. So it means that how suppose the bus ticket will be charged you. So of course, when the traveling is more kilometers, so the price of the ticket bus will be higher. Right, so here I'll give you the certain examples of the cost unit. For example, the automobile, it depends on the number itself. If we produce more, so it means that it's going to be more. So biscuits, we are going to measure in terms of kilogram, all right? So chemical, it depends on if the water should be liter, gallon, and a certain thing is going to be kilogram. For the cement, it's going to be ton. Gas is going to be cubic meter or cubic foot. Hospital, it depends on the patient per day. All right, hotel, it depends on the guest or room per night, all right, or guest room per night. Power and electricity is going to measure by the kilowatt hour. Steel is going to measure by ton. Transport, it depends on the passenger or ton kilometer. All right, so it depends on the nature of the business. All right, so now we move on to the cost center. So the cost center, it can be location, it can be a person or equipment. So it means that here, where are we going to center the cost? All right, for the purpose of control. So here we have production cost center. It relates where the manufacturing take place. Normally, it's happen in a factory. And then service cost center. Right? So here it's stated like render services to the production cost center. So the manufacturing activities can take place. So it depends. So this one is stated like biscuit manufacturing company is going to be, the production will be making, baking, baking. So this is relates with the producing the biscuits. And the service cost center will be, they're not producing the biscuit, but it's actually they do something else, give service to the company. For example, the personnel, the purchase, the store, and the canteen. They do not produce a product, but they give service.